Alright, so Bitcoin, Dogecoin, blockchain. Unless you've been living under a rock, then this is exactly what you would have been hearing everywhere you went around this time last year. That was until the wild ride the markets have taken us on. You saw millionaires being created overnight, billionaires being exposed as frauds, as well as seeing your best friend lose most of his life savings because a coin he saw on TikTok was going to the moon. So with all that said, it's time I get into what all these fancy words actually mean and why they're so significant. So let's start by going back. To understand cryptocurrency, we need to understand what currency actually is. Currency, also known as money, is simply a form of value. For something to represent value, people have to trust it is indeed valuable and will stay valuable long enough for them to redeem that value in the future. And I'm assuming you have heard of coins, right? Well, these coins used to actually be made of precious metals such as gold and silver. This gave people the idea that they were actually worth something, as it would give traders reassurance that they could just take that coin and trade it for something else elsewhere. So whether I needed you to do something, or I just fancied buying a new camel, I would use these coins as my trade offer. This form of trading continued until banks became established and governments took control. We realized as long as there was trust within the system, we could move away from carrying these precious metals. This is where paper money came in. Nowadays, our currency doesn't have value due to the material. It's because the governments told their people that they would be liable for the value of this paper money. Our trust changed from something to someone. As technology improved, we were able to come up with more convenient forms of trading this idea of value to a point where we don't even see our money anymore. With online shopping and bank transfers nowadays, it isn't about having your wealth in forms of fancy metals and paper. It is all just entries on a spreadsheet going up and down. Now, the reason I've given you this information is to give you a better background of currency so we can finally figure out where cryptocurrency fits in. Well, in 2008, a document was posted online by a guy calling himself Satoshi Nakamoto. Although to this day, the publisher has yet to come forward, he gave the world something magical, a brand new peer-to-peer value exchange system, the first ever cryptocurrency, Bitcoin. The way to think of cryptocurrency is 100% virtual, and all it is the transfer of digital assets. This may seem odd, but the core concept is exactly the same as those precious metals and the paper people have been using for centuries. Cryptocurrencies are run using these things called ledgers. Think of these just like the spreadsheets the banks use to record all the transactions everyone is making. But instead of each spreadsheet belonging to its own individual bank, there is just one massive spreadsheet that records every transaction that is ever made within that select currency. But why exactly can this be seen as better? Well, there can be very many advantages when we compare these ledgers to how a traditional bank operates. Well, for one, it is decentralized. And what exactly does that mean? Well, it means no central institution owns it. No banks, no governments. It really is power to the people. Going back to those ledgers, since they are open to anyone within the network, even though there's only one ledger, there are many copies of that same ledger. Well, you may have heard of cryptocurrency mining or Bitcoin mining. Well, all that is someone who has set up a computer to check through these transactions on their copy of the ledger. But why are they doing it? Well, if you use your computer's power to mine, then you will be rewarded with a compensation of the cryptocurrency you are mining. The result of all these miners working together means that if I make a purchase of say 1 Bitcoin, then instead of just checking with one bank's records to see if the transaction occurred, every one of these computers are able to verify my transaction. Half of these miners must all process the exact same information in order to update their records. I know it may seem confusing to start with, but for a lot of people around the world, I believe they can see it as a much more simplified form of exchange. As there are a lot of places around the world that may not have access to the traditional banking system, but what many of them do have is an internet connection. And that is all you really need for cryptocurrency. And since it is run by the people, there are no interest rates, exchange rates, and it won't take days to send a transaction to the other side of the world. And for many of these cryptocurrencies, the transaction fees are practically zero. I think so many people believe in this form of exchange as it really is an open, traceable form of transaction. By giving the people the power instead of the central institutions, you are taking away the problems that can occur when only a select few have authority. For one, it can lead to corruption. When banks have a mandate to create money or save value, they basically control the flow of the world, which gives them almost unlimited power and can lead to money mismanagement. An example of this is printing too much money, which causes inflation. And if you have kept an eye on our inflation rates, you would know that is exactly what has been happening. With over $13 trillion being printed over the last 2 years, making up 80% of every dollar ever created, it is causing your savings to be worth less and less as time goes on. Now, let's get into where the crypto and cryptocurrency comes from. It is because they are secured by cryptography. A major example of this, which you may have heard of, is blockchain. And I know you may be starting to get a little confused with all these words I'm throwing at you, but don't worry, you're doing great, I promise. Blockchain is not a currency, it is just a secure type of one of those ledgers we were talking about. So you know that big spreadsheet everyone on the same network has? Blockchain is just a way of organizing them in, surprisingly, a block-like formation. So every transaction you or I would make, that transaction is recorded as a block. Each of these blocks contain data of each transaction that includes the sender and the receiver, how much was sent, and a hash, which is a unique identifier, as well as the hash of the previous block in the chain, or the last recorded transaction. The special thing about blockchain is that if any data in a block changes, then so will the block's hash, and because each block contains the data of the previous block, if one hash changes, the previous block will no longer have a matching hash, so every previous block beforehand becomes invalid. So if we combine this with those fancy mining computers that verify every transaction, then if I wanted to, say, commit fraud, for example, by trying to change a transaction so that it paid me more money, not only would I have to try altering the block of that transaction and all the previous ones beforehand, I would also have to tamper with at least half of all the miners that are validating that currency's transactions. And considering as of today, there are over 1 million Bitcoin miners, I don't think I'm going to quite get away with it. Whereas hacking into, say, your bank account may not be quite so difficult. Well, today we have only really mentioned Bitcoin, but there are over 12,000 different cryptocurrencies out there you can invest in, all with something different to bring to the table. Some good, some not quite so. A couple examples are Ethereum, the second most popular coin that can process transactions faster than Bitcoin. Cardano, considered to be technologically superior with lower fees. And the famous Dogecoin, the meme-inspired currency that everyone seems to love due to its joke factor and Elon Musk's obsession with it. So now I hope you are starting to have a better understanding of cryptocurrency and why so many people are excited for it. And you're also probably wondering, if crypto is so great, then why don't I just spend everything I have on some Bitcoin? Please don't. I know crypto might sound great, but I do believe that it still has quite a long way to go. It is still in its infancy, and it is not quite perfect yet, but just imagine where it will be in, say, 5-10 years. But if you are going to invest, I would suggest only putting in an amount that wouldn't make you start contemplating your life choices if you lost it, as it is a very volatile market that is not designed for the faint of heart. Now, with all that said, I do hope you guys have enjoyed and have hopefully learned something new today. Just a reminder that I am not a financial advisor, and it is always important to do some extra research before putting your money anywhere. But if you guys have enjoyed, it would be great if you could leave a like, and if you fancy hanging around for other crypto and investing tips, make sure to subscribe. Thanks for watching.